Why is private lending becoming the preferred alternative to banks in 2025? Let's dive into what's really changing in the world of finance. The financial world is shifting, and fast. Traditional banks, once the primary source of capital for businesses and investors, are finding it harder to meet the speed, flexibility, and personalized underwriting that the modern borrower demands. As a result, private lending is no longer a backup plan. It's becoming the first choice. Let's explore why more borrowers and investors are choosing private lenders over banks in 2025. Banks still follow the conventional model: slow, risk-averse, and document-heavy. Even financially strong borrowers face hurdles like extremely long approval and underwriting timelines, rigid credit score requirements, restrictions on property type, borrower profile, and location, complicated income verification, especially for self-employed borrowers, and underwriting based on tax returns, not real asset value. In a fast-moving deal environment, delays cost opportunities. Many businesses can't afford to wait 45 to 90 days for a decision. Private lenders solve the exact problems borrowers face with banks: speed, approvals in 24 to 72 hours, closings in as little as 3 to 10 days. Asset-based lending: private lenders look at the property value, the equity, the exit strategy, not just tax returns or credit scores. Flexibility: every deal is evaluated on individual merit, not generic bank rules. Types of deals that banks refuse: private lenders fund daily. Private lending has really become the go-to option for a variety of folks. Real estate investors are turning to it for fast capital to secure deals. Builders and developers, well, they rely on private lending for construction finance. Business owners often need capital that's backed by real assets, and self-employed borrowers appreciate the no-nonsense approval process. Even investors looking to refinance are choosing bridge loans instead of waiting around for slow bank loans. At the end of the day, borrowers value time and certainty, and private lending offers both. It's not just borrowers who benefit here. Investors are entering private lending for predictable, secured returns. We're talking high fixed yields that are backed by real collateral, plus recurring monthly income. There's also lower volatility compared to the stock market. And first position, lie-in protection gives investors some real peace of mind. Honestly, it's a win-win model. Borrowers get speed, and investors get security. With the growing demand for speed, flexibility, and asset-based underwriting, private lending is really set to outperform those traditional lending models. Banks aren't disappearing, but, their dominance definitely is. 2025 is shaping up to be the year private lending becomes mainstream, not just a niche option. The American financial landscape is changing, and honestly, the winners will be the businesses, investors, and lending firms that adapt now rather than later. Whether you're raising private capital or seeking funding for a project, understanding private lending today means leading tomorrow.